So TILA, Regulation Z, TILA deals with credit, APR, and advertising. TILA deals with credit, APR, and advertising of consumer loans. It requires lenders to disclose the complete cost of credit. Complete cost of credit. What do I mean when I say it requires them to disclose the complete cost of credit? It's the law that says that they have to tell you the whole story up front. For example, yes, you're buying this house for $300,000, but after 30 years, you would have paid blank. You get that? They have to tell you the whole story, the complete cost of credit. So they're going to ask you what law tells you requires the creditor to disclose the complete cost of credit. My daughter went to go buy a car when she graduated college, and she was smart. She didn't want us to go with her. She wanted to do everything on her own. So when she went there, she found a car. It was $16,000. We're like, do you want us to help you come and negotiate? No, I can do this. I'm educated. I'm in college. $16,000. Here's the picture of the car. Do you think? Great. But then she called us back about 15 minutes later, and I could tell she was in the bathroom. Mom, Dad, you guys better come because they're trying to trick me now. Because all the paperwork shows 19. No, they're not trying to trick you. They had to disclose the complete cost of credit. After 6 years of paying on the car, it will be this. What law says that they have to tell you that up front? TILA says they have to disclose the complete cost of credit. That's what that means when they say that. Okay? TILA is also the law. I asked you guys this on the flashcards earlier. TILA is also the law that established the 3-day right of rescission. What law established the 3-day right of rescission rule? TILA. So for those of you that don't remember, what is the 3-day right of rescission rule? In a HELOC and a refi, even though they sign docs, they have 3 days that they can change their mind. It's called the cooling off period. Are you sure you want to take out this additional debt? Are you sure you want to start your loan over? In a HELOC or a refi, there's a 3-day right of rescission. What law gives them that 3-day right of rescission? TILA. If it's a purchase, there is no right of rescission. So the question is going to be, what law established the 3-day right of rescission rule? TILA. TILA is the law that established the 3-day right of rescission rule. If it's a HELOC or a refi, they have 3 days, even though they signed the docs, that they can change their mind. If it's a purchase, 0 right of rescission. Says who? TILA.
So purchase.
Purchase, no right of rescission. If a borrower does rescind, and rescind simply means change their mind, then, and money was collected in escrow for whatever reason, they have 20 days. 20 days to give them their money back. So if a borrower rescinds, how long does escrow have to return any money collected? 20 days. The rescission period is up at midnight on the 3rd day. Not just the 3rd day, midnight of the 3rd day. They will trick you. Okay? You also need to know that the rescission period doesn't start the day that they sign. It starts the next day. So say the borrower signs docs on Monday. Day 1 is not Monday. Day 1 is Tuesday. So you'll get a question that says, the borrower signs docs on Monday. When is the rescission period up? Okay? And then it'll have A, B, C, D. A may say Tuesday. No. B may say Wednesday. No. C may say Thursday. Well, that's day 3. But what if D said midnight Thursday? You would have to pick the one that says midnight Thursday. You have to pick the most correct answer. Do you get that?
Okay, so if they sign Monday, he doesn't start till Tuesday.
Day 1 starts Tuesday. Okay? And you have to pick the most complete answer. Okay? So if they have Thursday there, that's good. But if they have midnight on Thursday, that's better. You have to pick the best answer.
But they ask you if the doc was signed today, when was the beginning of the period? Would they ask something like
No,
that?
they have to give you specifics. Because how would you know? Okay?
Would it have to be a business day? For example, if it was Friday, would it start Monday?
Yeah, and we're going to go through that right now.
If it's signed on Monday, then it starts on Tuesday, so it'd be Tuesday, Wednesday, Thursday. Okay.
Got it? Also, the borrower must receive 2 copies of the right to rescind. 2 copies. That's important. The reason why that's important is, number one, they're going to ask you how many copies of the right to rescind must they receive? 2. Okay? Then they're going to ask you if the borrower was not properly notified of their right to rescind. If the borrower was not properly notified of their right to rescind, how long can the rescission period be extended? 3 years. What do I mean when I say they were not properly notified of their right to rescind? That they didn't get 2 copies. Also, if there's 2 borrowers, each must get 2 copies. If there's 6 borrowers, each must get 2 copies. So if a borrower was not properly notified of their right to rescind, how long would the rescission period be extended? Or how long can it be rescinded? 3 years.
Can I say that?
Mm-hmm.
So on the test, actually, both tests I took, one of them had that question. There was 3 people owned it, and it gave you that. So that means each person got.
Each person has to get 2 copies.
Each person has to get 2 copies.
Mm-hmm.
So there were 6 copies.
Exactly.
Even if they're co-ownership.
Doesn't matter. Each person that's obligated on that debt must get 2 copies.
Do they all have to rescind?
Hmm?
Do they all have to rescind?
It takes only 1 to rescind.
Oh, really?
Only takes 1 to rescind. Now, TILA applies when there are more than 4 installments. Underline more. TILA applies when there are more than 4 installments, meaning more than 4 payments due. Now, TILA is for credit for anything. It doesn't have to be a house. It could be anything. TILA applies when there are more than 4 installments. For example, you see things a lot on Home Shopping Network. 3 payments or less, 3 payments or less, 4 payments or less. Why? So they don't have to deal with TILA. Because TILA kicks in when there are more than 4 installments. Then they have a whole different set of rules and regulations that they have to go by. I just bought, and just to test it out, a power pressure cooker. Okay? I bought 2. 1 for me, and I did it with the 3 payments or less option. Here's your receipt. We're done. Then I bought another one for my daughter, and I chose the 12-month payment. Here's your receipt. Here's your TILA disclosures. Here's your notices. Here's your TILA kicks in when there are more than 4 installments. Okay? 4 installments? No. More than 4. Why didn't they just say 5? I don't know. They didn't. Okay? TILA kicks in when there are more than 4 installments. More than 4 payments due. Simple as that. Got it? The only fee that can be collected before TILA disclosures is for the credit report. The only fee that can be collected before TILA disclosures is for the credit report. TILA disclosures must be kept for 2 years. Now this gets tricky, so pay attention to this. TILA disclosures must be kept for 2 years. If they just say in general, how long must TILA disclosures be kept? The answer is 2 years. But there's some exceptions to this rule. So you have to know the exceptions. If they specifically say, how long must the loan estimate be kept? The answer is 3 years. How long must the closing disclosures be kept? The answer is 5 years. But Artricia, you just told me TILA disclosures must be kept for 2 years with these exceptions. So if they just ask you on the test, general TILA disclosures, 2 years. If they specifically say the loan estimate, 3 years. If they specifically say the closing disclosure, 5 years. If they're not specific, TILA disclosures are kept for 2 years. What are the TILA disclosures? What are the TILA disclosures and when do they get them? The loan estimate and the closing disclosure are TILA disclosures. We talked about that earlier. The loan estimate and the closing disclosure are TILA disclosures. RESPA says when they get them, but they're not RESPA disclosures. They are TILA disclosures. And they get them on all transactions.
Would that be a question? RESPA?
Yeah, we talked about that earlier. So the loan estimate and the closing disclosure are TILA disclosures. RESPA just says when they have to get them. Remember, the loan estimate you get at or within 3 days of the application. The closing disclosure you get 3 days prior to doc signing, and you get it again at doc signing. But they are TILA disclosures. RESPA just says when they have to get them. Now, the CHARM booklet is a TILA disclosure. The CHARM booklet is a TILA disclosure. You need to know what CHARM stands for. Consumer Handbook on adjustable rate mortgages. Charm, Consumer Handbook on adjustable rate mortgage. When would the borrower get the Charm booklet? When they're getting an adjustable rate mortgage. Got it? It's the Consumer Handbook on adjustable rate mortgages. They're going to give you scenarios. Johnny is getting a fixed rate loan. He wouldn't get the Charm booklet. Sally is getting a interest only loan. She wouldn't get the Charm booklet. Dan is getting an adjustable rate mortgage. He would get the Charm booklet. It's the Consumer Handbook on adjustable rate mortgages. Got it? The when your home is on the line disclosure. If it's a HELOC or a refi, they get a disclosure. A disclosure is simply a notice that says when your home is on the line. Why, if it's a HELOC or a refi, it's explaining to them that you're starting your loan over or you're taking out additional money. If you don't pay this, your home is on the line. You can still lose your home. When would they get the when your home is on the line disclosure? If they're getting a HELOC or a refi. So again, the loan estimate and the closing disclosure, they'll always get. The Charm booklet, only if they're getting an adjustable rate mortgage. The when your home is on the line disclosure, only if they're getting a HELOC or a refi. You need to know what APR stands for, annual percentage rate. You need to know another word that they use on the exam for APR is effective rate. Effective rate. You may never even see the word APR. They may say the effective rate this, the effective rate that. What are they talking about? The APR. That's another word for APR. Two other words that they use in place of interest rate is note rate and nominal rate. Note rate and nominal rate. Those are other words for the APR. Other words for the interest rate. The penalties for violating TILA, because they have changed, so you want to make sure you understand them. The penalties for violating TILA, $5,000 a day per single violation, $25,000 a day for reckless violation, and $1,000, that's $1 million per day, $1 million for knowingly violating TRID. That's a warning to escrow companies who try to close early or things of that, they don't do the whole 3-day waiting period. They will be fined $1 million per day if they do that. You need to know the penalties for violating TILA.